What's going on, everybody? It's Stas here. So the stock market took another beating today as the S&P 500 went down over 1%, down 37 points. The Dow Jones down 240 points, down about 0.9%. And the tech stocks, the NASDAQ, led the sell-off today, down 1.3%, down 140 points on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm actually watching and looking to buy right now in the middle of September in 2020. And I also want to go over some stocks here in the NASDAQ, mostly some tech stocks that, it's funny, they're in a bear market and many of them are approaching bear market status. And I also want to talk to you guys about what I personally did in the markets today and what stocks I'm currently involved with right now. So a lot to go over. If you guys find value, hit that like button for me, subscribe to the channel. Let's try and get 20,000 subscribers, guys. We're so close, 20,000 subscribers, so subscribe. And also make sure to join our free Discord chat, free Facebook group. And if you guys want one free stock from Webull, that's also linked down below in the description box. So let's get into it, guys. Again, pretty choppy day again, volatile. It's been like this. This is nothing new over the past couple of trading days. Ever since September started, it's been rocky. It's been volatile across the board. And today, the S&P 500 and the NASDAQ experienced some pretty interesting technical breaks. And we'll start off here with the S&P. And one break that we saw is we broke 3330, which we've been talking about here on the channel as a pretty big level of support. And if we zoom in a bit here on the 10-day, 30-minute, you'll be able to see it, right? 33.30. And we also broke the low from, I believe this was last Friday on the 11th of this month. That was the low at about 33.10. We also took that out. So what that's telling me, and we actually hit a low at about 32.92, what that's telling me is the bears are still in charge, right? We hit a lower low. The downtrend is continuing, despite this little rally that we saw at the end of the day, right? We saw a rally, I guess that is good, but to me, it's just a relief rally. We got pretty oversold on the intraday chart, on the 5-day, 5-minute chart as well, and we saw a bit of action to the upside for the last about 2-3 hours of the day. So to me, that's just a relief rally, especially because the S&P failed to close above 33.30. Notice how we actually tested 33.30 and we actually sold off from there, closing at about 33.19. So at this point, guys, the S&P is still downtrending, and we could be going lower. And I actually mentioned this level, believe it or not, a couple days ago. And yesterday, I talked about how if 33.10 were to break, watch out for the move onto this 180 SMA on the 4-hour chart, which is around 32.80 to 32.90, and that's exactly where we are at right now. And this actually puts the S&P at an interesting spot. Not only are we holding, or not even holding, because we could break right through it, but I guess as of now, we are technically holding. Not only are we right around that 180 SMA, but we're also near an old resistance from back in the middle of July at 32.80. So if this does not hold, guys, if 32.80, 32.75, 32.90 does not hold next week, I think S&P could be going low 3200s, and the chart 100% backs that, right? If we break that level, we'll be going down to test the highs from back in the beginning of June. And at this point, S&P 500 is down, not a crazy amount. It's down about 8% from its highs. And you guys know if an index, if a stock falls 10% from its high, that is considered a correction, right? So we're not even in correction territory yet. We're getting there. If we get a couple red days next week, we'll be there, but we're not quite there yet. And if we get to 20% down from the peak, that's actually leaving correction territory and entering into bear market territory, which again, some of these tech stocks we'll go over in a little bit. They're actually getting there into those bear market territory levels. Some of them already are there, which is pretty crazy. I know it's crazy, guys. And going over here to the Dow Jones, Dow Jones today, you guys can see sold 0.9%. We ended up holding, in this case, we actually held a big support. We held 27,500. We did not break that point, which I'd say that's good. I'd say that's good for the bulls. That's pretty much solidifying this horizontal pattern that I'm seeing here. 27,500 support with resistance at 28,200. So that's a good sign. Next week, if we end up breaking 27.5, like I said yesterday and many days in the past here on the channel, I think we'll be going straight down to 27,000 bucks. And quite honestly, you guys can see this for yourselves, I'm sure. You can see the head and shoulder forming. We got the left shoulder here, the head as we rallied up to 29,100, and now with today's red day, we're starting to form the right shoulder with today's red day and yesterday's red day as well. And the second we break 27,500, watch out below. That's going to be the completion of the head and shoulder. And quite honestly, we could go much lower from there, from 27.5 to 27,000, and even lower from there, from 27,000, maybe down to the mid $26,000 level. That's if 27,500 breaks next week. We'll see what happens, but at this point, that is kind of what I'm seeing and what I'm thinking here with the Dow Jones. And the Dow Jones, if you guys didn't know, I mean, you should know at this point, it was not even at all-time highs before the sell-off. This is the only index, well, the Russell as well, but we don't really talk much about the Russell here on the channel. Out of the three major indexes, the Dow is the only one that wasn't at all-time highs. It was really close. It was about 300-400 points off the all-time highs, but we didn't hit all-time highs. So at this point, we're about, let's take a look, 6%, a little under 6% off of the highs from the beginning of this month. And from the all-time highs, we're about 6.5% to 7% off. So not much selling here, and it's clearly, well, there is selling, obviously, but compared to the NASDAQ, it's not that bad. It's only down about 6-7% from its peak. But when we pull up the NASDAQ, guys, the NASDAQ is down a good chunk. It's down about 12%. So this one is well into, not really well into, but it's creeping now into correction territory. Again, anything above 10% is correction territory, and 12% is above 10%. So we're in correction territory here on the NASDAQ. We broke a big level of support today, guys. And if you guys were watching, I mean, the NASDAQ was a lot more bloody than it closed, right? Than where it closed. It was down to 10,700. So it saw a rally of about 1.3% heading into the close the last 2-3 hours of the market. So if we closed at 10,700, I mean, the NASDAQ was down, let's say, almost 3%. So a lot of selling came in today across these major tech stocks. And with this 11,000 point break on the NASDAQ, which is big, again, we've talked about that in previous videos, it seems like we're going down to the mid 10,000s. Like I've said in these previous videos, right? I said the second we break 11,000, guys, there's high likelihood we fill down to 10,700. We did exactly that. Now we'll see what happens next week. I'm not saying that we're going to crash through the floor. The NASDAQ's going to go down another 5-10% next week. I'm not necessarily saying that, but if we break 10,700, we might see a further drop. But another thing that could happen here is don't be surprised, guys, if we saw some sort of relief rally. Again, this is volatile. This market's volatile. It doesn't necessarily have to go down every single day for it to be considered volatile. At the end of the day, volatility is when the market's swinging back and up, down very aggressively. So the fact that we saw 2-3 days of selling, we might see a bounce back now, maybe to test 11,000 again, maybe mid 11,000s like we saw last week, the past couple of days of trading, right? Previously to these 3 days that we just saw in a row of selling. We saw some selling, but then we saw a bounce back. So I wouldn't be surprised if we did see some sort of bounce back next week on the NASDAQ, quite honestly, especially if we get another red day. That's going to put it in even more oversold territory, in my opinion, here on the 4-hour chart. So watch for a bounce back on the NASDAQ and maybe across the other main markets, S&P, NASDAQ, or Dow Jones as well. And speaking of these tech stocks, and we'll get into some here that I was buying, but a lot of these tech stocks, guys, are in bear markets. Netflix is down about 18%, 17-18% from its peak at 560 back in the beginning of September. So that's pretty much 20%. That's very close to bear market status. And if we're taking a look at its all-time high, 575, that's about 19.5% drop from that peak. So you might as well just call it a bear market, right? Microsoft, I don't think it's quite down 20%, but it's getting there. It's down about 15%. So a lot of these tech stocks, guys, they're getting clobbered. Google is down from 1730 down in the mid 1400s. It's down about 16-17% from its peak. Facebook, I think Facebook now with the recent sell-off is approaching bear market territory as well. Yup, down about 17-18%. And Amazon is down. Let's take a look here. Amazon from its peak is down about 17-18%. And Apple, guys, this one is in bear market territory. This one is 100% because I checked it earlier. It's 23% down from its peak. So it's very obvious what is leading this market sell-off. It's clearly the tech stocks. It's clearly these companies that one could argue were frothy a couple weeks ago that are leading the sell-off as people are maybe taking profits, rotating money into other beaten down sectors, and maybe even just going into cash as we are seeing volatility and we are expecting more volatility in the market, especially as the election's coming up. The market's awaiting potential stimulus as well. And in my opinion, guys, if I were a betting man, I said this yesterday, I think a stimulus package is coming. The question is, when is it coming? How big will it be? And those are the main two questions, honestly. Those are the main two questions. And I think once that stimulus package hits, markets are going to go right back up. Maybe not in a straight line. It might take a couple weeks, whatever, but I think the markets will end up rebounding. And I don't think we're in some crash scenario right now like we were back in March, April, February, but I do think we are just seeing a bit of profit taking, a sell-off, a rotation across these different stocks. And if you're an investor, a swing trader, whatever you are, these are the opportunities to buy in. And I'm not telling you to buy in, but you have to look at weakness as an opportunity in the markets. Don't be scared. Don't freak out when stocks go down. If anything, you should be excited because they get cheaper, not only in price per share, but in valuation as well. There's obviously different ways to value a stock, but it's good for people that have less money for the share price to go down, and it's good for people that are value-oriented investors because when the share price goes down, the value of the business goes down as well, so you're getting a discount. It's the same thing as when you go to the store and you see your favorite shirt that originally it's $100, so you might not want to buy it at $100, but when it goes down to $70, hey, you might want to buy it then. That's the same way I view the markets, and that's the same way that you should view the markets at the end of the day. So let me know in the comments, what are your thoughts? As always, I would love to know what's going through your guys' head. And we got some news today around TikTok and WeChat, guys. This is interesting stuff here. So we all know Trump back in the beginning of August said September 15th, TikTok will be no more here in the U.S. unless a U.S.-based business ends up buying it out or coming to some sort of agreement. So now we're seeing that's happening with Oracle, but there's some not, I don't want to say issues, but there's some stuff going down. The Commerce Department issued regulations Friday to bar U.S. companies from providing downloads or updates for the TikTok and WeChat apps after 11:59 p.m. on Sunday. Companies will also be banned from providing data hosting services for WeChat at that time. Commerce said it would allow U.S. companies to continue providing web hosting services through November 12th for TikTok, amid talks with the Chinese owner ByteDance and Oracle Group to create a U.S.-based owner of the video sharing app that has become a fixture on millions to millions and millions of American teenagers' smartphones. Commerce will also allow U.S. companies to continue using WeChat outside of the U.S., including in China, where the multi-purpose app owned by Tencent Holdings Ltd. is used for mobile payments, messaging, marketing, and business communications. So from what I understand, I don't think you'll be able to download TikTok or WeChat after Friday night if you don't already have it. So by Sunday, you won't be able to do any updates or download it. So this is your last chance, guys. If you want TikTok, go download it right now. I actually deleted mine like a month ago. I don't even use the app, quite honestly. I think it's a waste of time. I think I could be going and just doing better things with my time, make more money, do this, help somebody here out there, do this for somebody else, work on YouTube videos. I think there's more time to be put elsewhere other than TikTok, but obviously a lot of people out there love it. So yeah, I just figured to update you guys there, and I could be missing some things. I'm not 100% following this like a hawk. I could care less, to be honest, about TikTok, but I know some of you guys care, so that's why I cover it here on the channel. And I'd love to know, again, your thoughts on TikTok, everything going on, and just your 2 cents. Let me know down below in the comments. Now, let's get into what I personally did today, and we talked about tech stocks a couple minutes ago. Many of them are seeing air pop out. Not saying it's a bubble, but I'm saying we're seeing a big correction, 15, some over 20%, right? So I ended up adding a bit more Apple today. I'll be quite honest. I bought more Apple, and this is a stock that I've been holding since the mid-120s, right? I got in, I believe, right around this time period right here. I got in a little bit there. Nothing too crazy, not too heavy, knowing very well it could go further. And what do you guys know? It went further, right? It went from 125 down to all the way today to about 106. So I ended up picking up a good amount of shares here at $108 and roughly 50 cents, I believe, right around 108.50, and that actually brought my average cost down substantially from mid 120s. Now I think it's down to almost the mid 110s, right around 115, 117. So I'm very happy about that. Apple's one that it's getting a bit of heat right now around the iPhone 12, and historically speaking, I believe September months obviously hurt the markets. Historically speaking, the markets have been weak in September, but also Apple's been weak in September, and October is going to be a good month in my opinion for Apple, as the Apple iPhone 12 is going to roll out. We'll get some more specs on that. So at this point, I want to get into Apple and just start buying more shares leading into these next couple of months. And for me, this is a longer term swing. I'm not looking to get out of this next week, the week after. I want to hold this for some time here, AAPL, right? In anticipation of the iPhone doing well and in anticipation of more stimulus, which at the end of the day, guys, it's going to push up the markets, because as more money is being printed, asset prices go up, stock market and real estate, and I think Apple is in prime position to go higher because of that. And I'm also still in Amazon, AMZN. I picked up some shares yesterday at $3,010. Nothing crazy there, quite honestly. I'm holding on to that, and I'm down a little bit on that position, guys. And you'll notice a lot of these positions I'm down on. Amazon, Apple, and even Shopify. I'm still in Shopify. I got in at 913 actually. And Shopify did well today, believe it or not, up 3.5%, up $30, but I'm still down about $11, $12 per share, as Shopify is trading right around $900. And all of these are longer-term swings, Shopify, Amazon, and Apple. And I think they're all going to recover, or else I wouldn't be in them. And Shopify is one that arguably has more potential in some of these, because it has been beaten down a lot worse, and it really hasn't gone anywhere in the past couple of months. I mean, ever since the beginning of July, end of June, it's been trading sideways. So I think this is poised for some sort of explosion back up to the thousands. So I'm holding on to Shopify for that. And Workhorse, guys, oh my goodness. Did I expect Workhorse to rally all the way up to the 30s today? No, honestly, no. I didn't think it was going to have this type of rally over the past 2 days, but it did, right? This is the type of stock that doesn't cease to amaze me. It always, not always, but let's just say, yeah, it always does, amaze me sometimes. But it went up to $31.30 today. I've been in since $23. I trimmed some profits earlier this week at $25, kicking myself for that a little bit, but hey, it's okay because I said I'm going to let the rest of my position ride, and that's exactly what I'm doing. And hear me out here, guys. Hear me out. Workhorse, I'm not bearish whatsoever, obviously, because I have shares in the company, but I think it's due for some sort of correction, due for some sort of pull down. Obviously, at this point in time, a lot of people, call it FOMO or whatever, a lot of people are getting into the stock in anticipation of this $6 billion USPS contract. Whether it gets all of it, half of it, 25% of it, 75% of it, people are speculating that they're going to get some of it, so they're piling into this company like crazy. And take a look at what happened. Just read this pattern with me here, guys. Back in the beginning of June, middle of June, Workhorse went from $4, $3, and it went all the way up to $22. So that's a massive run-up, right? Massive run-up. And then that was followed by a period of time, about a month, 2 months, of selling off and consolidation, right? It went from $22 down to $14. That was a sell-off of 35-40%. Very healthy sell-off there, considering it just pretty much 10x in the past couple of months prior to that. So we saw the sell-off and the consolidation for 2 months, followed by the run-up now all the way to $31. And we obviously can't pinpoint the peak, otherwise we'd all be millionaires. But I think we could we could try and predict a potential pull down, similar to the pattern that we saw before. Whether it pulls down at 31, 32, 33, 35, I think we're going to see some sort of pull down and consolidation, and it'll be healthy, right? Whether it pulls down from $30 to 25, 23, 22, chills there for a couple of weeks, who knows? I think that could be very healthy, and it could be really kind of repeating the pattern from before, followed by another takeoff, maybe up to the $40s or $50 level, right? And that obviously depends on this contract. Let's say tomorrow we get the contract, or next week. Obviously, Workhorse will not pull down to the mid-20s, low 20s. It's going to go straight up to $50, $45, $60, who knows? But if we don't get this contract for, let's say, hypothetically, 2 months from now, a month and a half from now, a month from now, I think a pull down, consolidation would be very healthy. And I'd love to know what you guys have to think down below in the comments about that. But for me, I'm still long. I'm holding on to some shares here, and I'm comfortable with it. And I'm still also in IPOB, which is more like a longer-term position for me at this point. Not much really a swing trade, but I did pick this up earlier, and I feel like I'm just going to hold it for some time here. I'm going to be swing trading it, and I do want to add more if this does end up selling off, let's say to the 13, 14 level, which it is right now. I didn't add more today, but I'm just holding on and maybe looking to add more next week, and my average cost is right around $16 per share. So let me know down below, guys, what are you doing this week in the markets? What did you do? What are you looking to do next week? I would love to know. Now, let's talk about some other stocks here that I'm watching. Again, I'm mostly watching tech names at this point. A lot of these SPACs, Workhorse, just a lot of those types of stocks. But I'm also watching some other ones. TTWO. This is an interesting one here. Take-Two Interactive Software. This one's down about 22 points from its high, down about 12-13%. And you guys can see some straight-up consolidation these past couple of days. 5-day, 5-minute shows you that from 150 to 162, down about 150, back up to 160. We've been consolidating, bouncing within this little 10-point window. And I'm thinking the second that TTWO here breaks out of this 180 SMA on the hourly chart, maybe around 165, this could be a play back up to maybe 170, 175, 180, right? Especially if this uptrend holds, which at this point in time, it seems like it is holding. And if you guys didn't know, TTWO has some of the best brands under its belt. It has 2K. You guys know 2K, NBA 2K, all the other 2K games, and Rockstar. Rockstar is incredible. Grand Theft Auto, Red Dead Redemption. These games are incredible, and those are what TTWO has, right? So if you're into that, if you believe in those brands, those companies long term, if you think this stock could bounce back, hey, this could be a play for you. So take a look at this one. Another one that a lot of people have been talking about, I actually haven't watched this one in recent days, is RKT, Rocket Companies, Rocket Mortgage, whatever you guys want to call it. This one just IPO'd a couple of weeks ago, I think. Let me double check if I'm right on that, guys. Yeah, it did. It IPO'd back in the beginning of August, it seems like, and it hit a high at about $34. Now it's trading at about $22, down about, that's a big chunk. It's got to be like 30%. It's down about, 33, 34% from its peak there. But still, one thing that worries me here, guys, and me being mostly a swing trader when I'm short-term trading the market, what bothers me a little bit here is, it is holding that 22 level as a support, which is good, but it's still seeing resistance under the main moving averages, both the 50 and the 180. So I'd like to see some sort of break into the mid-20s, 25, 26 bucks, probably. Let's just say 25. I might even set an alert, 25 bucks here before I do end up maybe buying into some Rocket here, RKT. So mark is at or above. Let's just put it at around 25 bucks. So ThinkOrSwim will alert me on Monday or at some point next week if this does happen, if it does break 25. But if not, I'm probably not going to touch it, guys, to be completely honest, because I don't want to ride a company, especially a company that just IPO'd on this little downtrend, right? I am in Amazon, Apple, Shopify that are pretty much downtrending all, but the difference there is they're more stable. They didn't just IPO. I believe in those businesses more and the stocks in the short term more than a company like Rocket. But that's just me. Hate on me in the comments if you want, but that's just me being speaking the truth here. And another one which pulled a green day today, guys, somehow, is PayPal. Up 28 cents, up 0.16%. This one actually might be in bear market territory as well. And there it is. It almost is. Down 18% from its peak. And like many stocks, it's downtrending in the short term, right? In the past couple of days on this 20-day 1-hour chart, it's clearly being rejected by moving averages, but I would like to see a breakout. If we see a breakout, 180, 185, hey, PayPal could be an opportunity. And if you have a stomach, you can stomach some short-term losses. Hey, you could end up getting in on this little downtrend before the confirmation, but that is a bit risky, right? And again, this is not financial advice, but you can do whatever you want at this point in time. And I'm in some stocks that are downtrending, like I said, but the way you can mitigate further loss in those stocks is by having cash, because if you have cash, you have opportunities to maybe buy in to some of these stocks at a lower price, dollar cost average down, and so forth. Just having that cash gives you the ability to do what you want, right? And DPHC is a SPAC here that I like. It's taking Lordstown Motors public. This went up 4% today. We called it out yesterday, and we're getting closer to that resistance at 30 bucks. This pattern today is looking very bullish to me. Bull flag, you guys can see it right here. Boom, take a look at that. So the second I see this get out of $30, we tried earlier today, but we failed. But the second it breaks 30, I think DPHC is going to go bananas. I'm not sure where it's going to go. And who knows, it might go lower from here. I wouldn't be opposed to that. But if 30 breaks, we could go 32, 33, 35. But if 30 fails, we end up selling off. We could maybe test the 50 SMA on the 4-hour chart, which could be anywhere from $22 to $25, which could also be a good opportunity. So I'm open to either scenario, and I'm going to be patient to see what ends up happening. And Google, here's another one, guys. We touched upon it a couple minutes ago earlier on in the video. This one, the closer it gets, like I said in previous videos, I mean, if Google gets under $1,200, $1,100, I'm going to load the boat for a long-term position. And the closer it gets, I might even build a swing position in it as well, right? And at this point, we're down about 17% from the peak. It seems like we are approaching a big level of support. Old resistance at about 1450. So next week, watch and see what it does at 1450. If it holds, we could get a bounce back play, maybe back up to the mid 1500s. If not, if it breaks, that is where we could end up going down to those $1,300, $1,200 levels that I mentioned. That, hey, at that point, I would probably be building a long-term position, right? So watch out for Google, and I already own Google long-term, but I'd add more to it at those points if we do get down there. And Tesla, guys, this is the most popular stock for next week, no doubt about it. Battery Day is coming up on the 22nd. I believe that is on Tuesday. Watch out for Battery Day here, guys. And there's going to be likely a couple categories that are going to be discussed, right? Battery cost, battery reliability, and battery capacity. New battery technology should also be discussed, and investors should also be ready to hear about stationary power, which includes Tesla Powerwall business. And you guys have to realize Tesla is not just a car company. It's in solar, it's in insurance, it's in software. It's a tech company on wheels. It does so many things. And on Tuesday, we're going to get some secrets. I have a feeling. My gut's telling me, hey, we're going to get some news. We're going to get some insights on what's going on here, obviously with batteries, but Elon might pull a rabbit out of his hat, out of his sleeve, and maybe surprise us with something. So I'm thinking Tesla is gonna. I don't know if it's gonna go up, go down next week. I wish I knew, but it's obvious that investor sentiment is positive. Tesla was up almost 5% today as the markets in general went down. So that is something to note. The strength in the markets, weakness. The strength in Tesla as the stock market in general is weak. So I'm loving it, guys. I'm loving it. Tesla here in the short term, it's on the 20-day chart. It's uptrending. You guys can see it. It's recovering. It's out of those moving averages that it was under, really ever since the beginning of September heading into up to the 14th of this month. So we broke out of the moving averages. Now we could be going back to test those highs at 500, 530. It just depends on what ends up happening next week with Battery Day, investor sentiment, and we just have to wait and see, guys. A lot's going to go down next week. So that's it for the video. I'm going to wrap it up here. Let me know all of your thoughts down below in the comments. I would love to know what you guys have to think on anything we talked about in this video. If you guys want to chime in, let me know in the comments. And if you guys like the video, hit the like button and subscribe to the channel. 20,000 subs is right around the corner, and it wouldn't be possible without you guys. And also feel free to join our Strive Smart Discord, Strive Smart Facebook group. Get your free stock from Webull. All of those are linked right down below in the description box. So I'll catch you all in the next video. Have a fantastic weekend. Thanks for all the support, guys. Thanks for watching as always. It means a lot to me. Stay safe out there. That's the most important thing. Peace out.